Welcome back to the channel. As I shared in the previous video, I created a passive income calculator in Google Sheets to help project out into the future what I could expect in dividend returns from a holding in 10, 20, or 30 years from now. There are many other online dividend calculators out there, but I built this one to be as simple as possible where it pulls in all the necessary data for you just by entering the ticker symbol. This isn't perfect by any means, but it's to quickly give a rough estimate of what you could potentially expect in terms of performance in the future. I've had a lot of fun creating this spreadsheet, and if you could help out the channel by subscribing for future videos and giving the video a thumbs up, I would greatly appreciate it. Now let's get into the video. So when you first enter the spreadsheet, you'll be shown a welcome message with all the details and instructions you'll need to use the calculator. This will be a publicly shared spreadsheet, so I've created multiple tabs at the bottom which are all exactly the same, but this way multiple people can use it at the same time. I've made it this way so that if there are any problems or changes I would want to make in the future, I can do so in the same spreadsheet and have it updated for everyone. When you jump into one of the tabs, see if there's someone else already using the sheet before putting in your data. If the fields already have existing data but nobody is working in that tab, feel free to delete it and replace it with your own. To get started, you'll have to keep in mind that you're using the corresponding prefix needed to locate the stock that you're looking up. For all US stocks, you won't need to add a prefix and can input the ticker directly into the field. Whereas those looking up stocks on the Canadian TSX exchange or NEO exchange, you'll want to use the TSE or NE prefix followed by a semicolon before the ticker symbol. As I mentioned, it's meant to be very simple to use, so all you'll need to start is just the ticker symbol. The first thing that'll stand out would be the yellow boxes, which will be where all your inputs will go. Let's use for example Coca-Cola, so the ticker symbol will be KO. Once we enter the ticker symbol, you'll see it begin to populate the other variables automatically. So here we'll see the stock name, current stock price, distribution frequency, last distribution amount, and then the dividend yield all filled in. Next, we'll use $10,000 as our initial investment, and then entering how much we'll want to continue contributing monthly. If we don't want to keep contributing, we can leave it blank or put $0 in this field, but for now let's use $150 per month. Then we input how far into the future do we want this projection to be, and here we'll say 10 years. Here we'll now have options to input the growth rate per year for the stock price and the dividend growth. The formatting for the input field can be a bit weird. If you don't see the percent symbol next to the number like you see here, then you might have to go back and manually include it yourself. You can also leave these fields empty or set them to 0%, but for this example we'll input 3% and 4%. But before I do so, let me just preface that these are just quick projections that are not based on any fundamentals. You'll see when I put in the numbers, below it will update the values for the future stock price and the future distribution amount to what the values would be at the end of the 10-year projection. So this means at the end of 10 years, we expect for Coca-Cola to be trading at about $84.50 and have a distribution amount of 0.7253. One thing you could do as a very surface level analysis is to go over to Google and take a look at the stock chart to get a better perspective. If we take a look at the 5-year chart, we can see that it's peaked around $65 a share and has been trading sort of within a range since the pandemic. If we zoom out even further to the max chart, we can see that the $65 price was the highest the stock has ever traded in its history. The question then you would have to ask yourself is if you believe that Coca-Cola in 10 years time will be approximately $84. If not, then the growth percentage maybe needs to drop down a little bit to 2%, which would give it a future stock price projection of $76.47. The same can be done for the dividend growth as well. If we were to head over to dividend history and look up Coca-Cola, we can see that the dividend increases have averaged around 4% or so, which is how it came to that number in the spreadsheet. So you can see how this will be able to help you obtain a slightly more accurate projection very easily, but keep in mind that this does not replace fundamental analysis, and it also doesn't factor in the variance that comes with a 10-year projection, where the stock price can go up or down depending on the current economic environment. Now moving on to the last few numbers here, we can see the distribution projections per quarter and also annualized. But what if the stock or ETF I want to look up has a monthly distribution? Not to worry, because if we change the ticker here to JEPI for example, we can see that it now updates the distributions per month instead of distributions per quarter. One last thing for this section before we move on is that you can also look at these for the scenario where if you were to stop contributing to the holding, this would be what you could expect to receive per month or per quarter and annually going forward into retirement. Finally, in this last section, I've included how much in distributions you would have collected at the end of the 10-year projection, and also what percentage of your initial investment you would have received back. So in this example, by the end of the 10 years, we would have collected over $5,900, and that would have been equal to about 59% of the initial investment of $10,000. But what if I wanted to double my initial investment? Then one thing we could do is to adjust the projection and increase the number of years to say 20 years. Now we can see it says by the end of 20 years, will have received almost 250% of the initial investment. Let's quickly go through another example with the Canadian ETF HYLD, which is a popular covered call ETF that tracks similarly to the S&P 500. For this example, we'll stick with the $10,000 initial investment and see how it can grow without any additional contributions. Now for how far out we want this projection to be, let's say 5 years. We'll play fairly conservative and say a growth rate of about 2% per year, and then put 0% for the dividend growth as the ETF prioritizes stability in their dividend distribution. So by the end of the 5 years, the stock price should be approximately $14.41, and the distribution amount has stayed the same. As for distributions, we can expect about $195 per month and over $2,300 annually. Then for distributions collected, we would have received about $8,800, and that would translate to approximately 88% of our initial investment in 5 years' time. So as you can see, there are a lot of things you can experiment and play with. I know I spent a fair amount of time both in creating this tool and also testing my own projections. If you appreciate this kind of content and want to support the channel, feel free to subscribe and give the video a thumbs up. The link to the spreadsheet will be in the description below and also in the pinned comment. If you have any questions, feel free to leave it in the comment section below, but otherwise I'll see you in the next video.